What's up, everybody? Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. It is still Tank Top Week here at 21st Century Renaissance. We're very excited about that. We're also very excited about this new convertible bond offering. We've been talking about this. This is really what we were hoping for, going all the way back to our quarter 4 2024 earnings reports. So we're going to be breaking this down a little bit, talking about what we can expect as far as the price action today and what the implications are for GameStop from this offering going forward. So that is coming up today. Before we get started, we do have to spend some time with our gratitude. So we're going to hop on over to the gratitude section. And once again, say thank you to Jennifer Niles for sponsoring today's newsletter and video breakdown, as well as to our monthly supporters, Not Medical Advice, Kurt Lusko, Cosmotropic, Diswag52, and Hey Luckies, aka Faithless Looter, who actually just went ahead and sent over a few more coffees. So many thanks. Go out that way as well. The main event sure is enough. This convertible bond offering, 1.75 billion base offering with the potential to add. Let's see, I think it's another $250 million. So yeah, another $250 million. So up to $2 billion in these bonds. Last time you'll remember it was something like a 1.8 or 1.28 billion with a 220 million potential extension, something like that. So it ended up being 1.5. Now we got 2 billion coming in. So fresh on the heels of this earnings report, which was very good, right? We have another offering. This was another thing that was on the table. We've been talking about this for months. The main question here, right, that was on the table with respect to these was, okay, is Ryan Cohen going to go ahead and do this as a regular thing now? Are these bonds how he intends to raise money off of GameStop's volatility? What really is he doing here? Now, I've seen a lot of messages come out. Some people have commented this on some things that I've posted. I've seen a lot of the fear, uncertainty, doubt come across the interwebs in a lot of different dimensions. We've also seen mainstream media go out and say things like GameStop shares keep dumping. What's going on? This is, in my opinion, another master play from Ryan Cohen. So let's talk about how to think about how these bonds work and why we're seeing what we're seeing. Okay, so if we take a look at our price action, right, it's quite obvious. What we saw from the moment that these notes were announced, and we have a very similar pattern here compared to what we saw the last time we had our bond offering. So pretty flat day. The day, well, not necessarily a flat day prior. We traded a bit, but okay, this week it was relatively flat. This time around, sharp sell-off immediately, then somewhat flat. I mean, we do look to be trending down a little bit more aggressively here pre-market today, and then of course super heavy shorting into the end of the day, followed by a slight uptick from a VWAP estimate and then recovery after hours. What is going on with this, right? Ryan Cohen himself went ahead and tweeted, retweeted somebody saying, is Ryan Cohen actually regarded? Okay, what is he doing here? Okay, what is it that we talk about here? We talk about this on our live streams. I've been talking about this actually for a year, right? Next week, June OPEX, this coming year, I will have been at this for 1 full year, no breaks, 1 article every single trading day, over 7 months of making videos, 7 months of live streams talking about these concepts. A lot of this is based on, right, some of this legacy DD. Obviously, not all the details of that were correct, but essentially the central value of GameStop, and I'll put this very succinctly, GameStop is a volatility product. Ryan Cohen understands that GameStop's #1 product is its volatility. Volatility that is locked in through the history of the company, has gone down with the company at various periods in its trading past, with respect to whatever happened in 2021, with respect to what happened last year, with respect to legacy swap positions, with respect to internalized legacy short positions. All of these contribute to a latent high level of volatility in GameStop that is manipulated and exploited by Wall Street at large, especially legacy shorts, in order to maintain margin balances and the feasibility of slowly unwinding their legacy short positions while possibly also making some money on top of that. This entire ETF musical charade thing we've been talking about, or musical chairs, this internalization of fails to deliver through this daisy chaining of ETF FTDs. All of this has to do with the strategic repositioning of volatility throughout the year, such that institutions can take advantage of this volatility through the options market. That is primarily what I do in order to make money. It's how I have made money off of GameStop as my primary means. In fact, yes, my primary means, almost my sole means of financial support has been exclusively through trading GameStop over the past year by timing and trading my understanding of its volatility cycles. Ryan Cohen has demonstrated with these convertible bond offerings that he has the knowledge to go ahead and deploy specific capital raising instruments from the company directly, which take advantage of this volatility at the expense of those who in the past have been manipulating the stock for the purpose of profiting off of that volatility themselves, primarily through the options market. What he has done, and we can take a look at our charts. I'd like to point this out on our charts. As we do this, we pop over to our GameStop daily chart here, right? We've talked about GameStop's volatility cycles. We've talked about the ways in which institutions themselves have done this. Richard Newton has talked about this extensively. Reddit user Gherkinit, going all the way back to 2021, talked about this extensively. What occurs throughout price action in GameStop over the course of the year? We have moments where large numbers of ETF FTDs are cleared, we get upward volatility, and then volatility is sold as a product, right? Volatility is sold through the options market over a period of several months, while institutions also use the available lending pool and its extended synthetic liquidity reaching through maybe dozens of ETFs in order to position the stock price downward. Then when volatility gets low again, we do this again. If we look at the story of last year, this is what occurred basically off of December earnings, volatility onto the tape, vol swaps, roll swaps, a little bit more unexpected, up, short it, do the ETF thing, move it down, low vol, 52-week low, and now let it back onto the tape. Then we get some sugar spice and all things that are nice from Roaring Kitty. We get a double top formation and sell vol. Hedge close out May OPEX tailwind and sell vol. Then close out July OPEX tailwind. Okay, now it's earnings. We use that as an excuse to short. Sell vol. And now we have unexpected thing with respect to FOMC rates. We had a rate cut. Shoot up. Buy the shares. Close out this offering and sell vol. Back. We close. What do? Send her back up. Let the volatility come in. It's going to extend for a little bit more. Why? Because we had 2 more rate cuts. And now we take another 3 months, sell vol, short, cover a little bit, right? So now we have, this is December OPEX tailwind, and now short, go into earnings, do the same thing, right? Okay, but with this convertible bond offering back in March, Ryan Cohen was able to harness volatility that had come back onto the tape in the course of a day and use that volatility as an engine to transfer capital, interest-free capital that does not dilute the company until the stock moves up beyond a certain price point, that allows the company to take that cash and use it for corporate purposes, for acquisitions, whatever. Right, he took $500 million or however much this was of this $1.5 billion, went ahead and bought some Bitcoin. Right, this feeds into the game chart stop away thesis. This primary investment model, which we got guidance on going back to March of this past year. What we have seen, this was our hypothesis, was that this is what Ryan Cohen would do going forward. When we had moments of high volatility, Ryan Cohen would go ahead and go forth with an offering, transfer billions of dollars into the company, invite shorting from parties who historically have not been interested in partaking in the volatility game with GameStop, and then cause a several-month rundown to instead take place over the course of a single day. What Ryan Cohen has done here is he has effectively taken what should have been about 3 months of waiting, 3 months of shorting, and by doing this offering, he's going to have ended up condensing this into a single day of price action. So, okay, what does that mean? That could mean, yes, that we go down to 2150. I mean, I don't know, right? We had this 2x net asset value thesis. Perhaps it was indeed rather related to some sort of technical moving average level. We have been hanging out right around Morningstar fair value level in the mid 23s, right? Shortly after this offering, we had Morningstar come out and say, oh, the company's fair value is really about 2350. So maybe we just hang out here. Who knows? We did get very intensive shorting during the day as these bonds were priced last time. But the significance of all this is Ryan Cohen has effectively, and this is why I titled this video this, it's also why I titled today's article similarly, is that Ryan Cohen has now harnessed these volatility cycles for the company. Now, not only does the company benefit, or can it benefit, right? So with the at-the-market offerings, the company only benefited from fluctuations in price, very much related to price. But with these bond offerings, these bonds effectively work like call options, in which Ryan Cohen himself essentially sells $2 billion worth of out-of-the-money calls. That's effectively what he is doing. And he is also dictating to the market, by virtue of the offering itself, when and how the price will move. By choosing to go forth with this offering, he has said, okay, we're going to go down now. He could hypothetically go ahead and purchase at this low. Other insiders can do this. Shareholders can go ahead and do this. But in this fashion, right, what he is doing is he's translating this volatility gain into gains for the company itself, to the benefit of shareholders who do not engage in the volatility game, who have been waiting around for years for GameStop to transition into something that is a bit more common, to the Berkshire Hathaway model, let's say, to a more conventional model of compounding returns year over year. So this is very interesting, right? I think this will change what we end up looking like going forward. So not necessarily looking at this now 2 months up, 3 months down sort of waveform here, but right, insofar as we move down to bounce back up and then maybe come back down as we need to roll swaps and then come back up, right, as we get OPEX tailwinds, as we get announcements from FOMC, right? So July 31st, we do have a very large basket swap containing GameStop that very much likely needs to be rolled. July 30th, we have FOMC, which is very likely going to be announcing a cut to rates, which should have a bullish effect on GameStop. It seems to have had that effect last year at several key points. So, okay, what is that going to look like in terms of our price action today? Well, just as we saw here, right, this did involve a significant amount of shorting intraday in order to optimize the pricing on the bond. So institutions went ahead, moved the bonds, moved the share price down to about 20 and change, $21. And then that pricing was then a 37.5% premium was applied to it to put the bonds basically at the high of the previous day, which was around $29.85. Something similar might happen. At the same time, they've already started aggressively moving the price down. Where, like I said, we are down around Morningstar fair value now. It is not concentrated along a technical level, but it appears to be moving downward at a pace much greater than that seen basically coming out of Q4 earnings of 2024. So there definitely are some question marks in exactly how this is going to manifest. How this price action is going to take place. However, it does look like if we go ahead and take a look at our options landscape, right, we can see that really there isn't anything much more to our downside. So if we do move a couple more dollars to the downside, what seems to be the case is we'll just really quickly, within a number of days, come back to the upside. Maybe that is also anticipated by the company. Perhaps we will get some sort of interesting announcement at the annual shareholder meeting, which will be taking place today at 11 a.m. Eastern time. Be very excited to see how that will work, how that may affect. Right, the meeting should conclude sometime before the pricing of the bonds begins. So it's going to be quite the day. It's going to be quite the day. A lot of new information will be coming our way. Things are going to be volatile, though that might not necessarily be reflected in the IV. If we do see volume spike up, which we did see, that this will be one of those rare moments where we see GameStop's price go down, but its IV go up. We had something like 90 million volume, I think, back during the last bond pricing. We could see something similar this time around. But it is important to remember, I know a lot of folks, right, we're not happy with the shares going down. Of course, it's our investment. We love our company. We love our stock. Don't like to see those shares go down. But remember, this is an opportunity. These are consistent opportunities to continue to add to your investment if you are convicted in this play. Ryan Cohen appears to grasp the fundamental principles of what is going on with the financial mechanics of this company in Wall Street, how and why it is traded, how and why it is valued, and how specifically this apparatus can be harnessed by the company, how this volatility gain can be harnessed via the number of debt instruments available to the company, extremely favorable debt instruments that can be used in order to translate those manipulative dynamics in the broader market. So I'm very excited about what we're seeing here. Obviously, going to see some interesting price action, to say the very least. But I'm looking forward, as I said yesterday, right, meeting this with a spirit of adventure to see where indeed we go. So very much looking forward to breaking down a lot of this with you guys Friday night at our live stream. It's going to be an excellent time. Looking forward to seeing what today has in store for us. So thanks very much, you guys. Hopefully you look. I certainly look forward to seeing you guys at the live stream and in our video tomorrow. So good luck out there, and let's go GME.